Our daily mortgage interest rate update and what the heck is going on in the U.S. housing market. If we haven't met, my name is Chelsea Winstead. I am a home financing strategist and a mortgage lender. My goal is to show up daily and to give you the rundown on what the heck is going on with rates, how and what in the heck to expect with the housing market. My goal is to present you with information so you feel educated and equipped to take on buying a home in 2025. Okay, so let's kick it off. Conventional rates today for our 30-year fixed is right around 6.9%. Again, as I have been saying pretty consistently, not seeing any major drops right now. FHA is right around 6.875 for a 30-year today. VA loan right at a 6.75 today on average. As I always say, if you are open to the convo, ARMs right now can be a really good option. I have a 6.5% ARM right now with no points. So for those of you that are actively in the market and you are actively looking to buy, especially if you think you're going to be putting in an offer within the next month, or, today versus, 2 months out, chat with somebody. If you're on the East Coast, let's have a conversation. More than happy to walk through what an ARM actually is. I think there's a lot of misunderstood information about them, but they are really strong options right now to essentially ride out the market without having to pay money for a lower rate. As a caveat, I'm actually a big proponent right now to avoid two things when it comes to buying a home. So number one, this is a little polar, and I did a whole video on this a couple days ago. It is to be mindful and a bit wary of down payment assistance program. The reason that I say that is that we are anticipating a cut in rates before the end of the year. Okay. So within the next 6 months. And then additionally, within a year from now, we are expecting to see another pretty major cut. So one thing just to note is that even though home values in most places are continuing to rise, the key thing when it comes to buying a home is that what you really want to be able to do is to buy that home for the least amount of money possible. The rate does fluctuate. With that also being said, I would never recommend that you purchase a home with a price point and an interest rate that you cannot afford. That is one thing, y'all. If you are new here, or even if you have been around here for a while, my job and goal is not to convince you to buy a house. My job is to equip you with knowledge and to advise you in the best way to purchase a home if you would like to. I think there are some people with some agendas on here because obviously I get paid if and when you do purchase a home. The reality is that I treat my clients like my family, and sometimes it doesn't make sense to buy a house. It doesn't. If it's going to truly put you in a financial hurt, no, I don't think it makes sense. But if you are someone who has been saving, you have been working on your credit, you want to buy a home, I always say, when is the best time to buy a home? When you would like to buy a home and when you are financially ready to buy a home. When is the best time to sell a house? When you need to sell your house. There are no secrets. And for many of you, and some people are probably going to watch this and be like, oh, it's me. If you try to time the market, you will often just time an ass kicking, because none of us know, literally day by day. I do this for a living. I look at these rates, and none of us know what is going to happen. So all we can do is make the best decision with the information that we currently have in front of us. With that being said, the reason I went on that whole tangent is that there are two things that I want you to be very mindful of when it comes to purchasing a home, and specifically when it comes to your interest rate. So I've done a couple videos in the past on a temporary buy down and on a permanent rate buy down. I personally feel that money that you have access to, because we are anticipating 2 drops within the next year, I don't like for people to utilize down payment assistance programs that then are actually second mortgages, right? Second liens on their property. It's not actually free money, because it can prohibit you from being able to refinance. I also equally don't love people spending a lot of money on a rate buy down at the moment when we are anticipating that we are going to see a drop. Here's why. Okay. So, did a video on this. I will actually, funny enough, the video says July 7th. God help me. Obviously I cannot tell the future. So it was June 7th, and it says be cautious of down payment assistance program. So I posted this a couple days ago. Please go watch that. If that's you, and you are like really banking on getting a down payment assistance program, I would advise you just to watch that specific video. But one thing just to be mindful of is a down payment assistance program typically is not free money. It's actually a second loan that you're not paying interest on and you're not even paying a payment on, but it does sit on your home. So if you go to refinance in 6 months, what will likely happen is the fact that you haven't gained enough equity in that property to refinance will prohibit you from then being able to lock in a rate. So like today, let's say you buy your home and you're at a 6.9 interest rate, and there's no points associated with that. Fine. But then in 6 months or a year from now, let's say rates drop to 5.25%. And if you go to refinance and you don't have enough equity built to do that, what will happen is that you will have to pay that second mortgage in full to be able to refinance. Depending on where you live and depending on how much money you took for that down payment assistance, that might be a shitload of money. For some people, it's $15,000. And I mean, not everyone has $15,000 laying aside. So one thing I would say be mindful of is if you are looking to buy, especially right now, and especially if you are watching and paying attention to the rates, I would be careful to maybe not get into something with a down payment assistance program if indeed it is not a grant, which most of them are not, and if indeed it would prevent you from being able to refinance. Second thing that I'm not a huge fan of right now is for people paying for a permanent rate buy down. So let's actually say you're quoted at, let's do easy math, 7%. Okay, that's your interest rate. Fine. Actually, it's pretty normal right now, to be honest. And then let's say you want to pay money to get your rate down to, let's say, a 6.5%. So typically, when you pay one discount point, right? So you want a discount point, that's 1% of the loan amount, okay? But that only drops the interest rate by 0.25%. So obviously, depending on how much your loan is for, that can end up being a shitload of money, even just to drop it by 0.5%. And the rough thing is when you do a permanent rate buy down, you don't get that money back. So if and when, again, so let's say you're quoted at 7%. Right? And then let's say you want it to be 6.5%. You literally pay money out of pocket at closing to get it at 6.5%. And then let's say in 6 months from now, the rates naturally drop to 5.875. The money that you have spent to get that 6.5 is just literally dust. It's gone. You don't get it back. There's no refund. There's no way to recoup that. So for many of my people right now, I am really, really advising and really pushing folks to consider not doing a down payment assistance program if you can avoid it, so you can take advantage of refinancing when the time is right. And also writing out a bit of a higher payment, again, if you can afford it, okay? I'm never going to recommend that anyone do something that they just genuinely can't. Also, y'all, I also have like compliance things on my end. Your debt to income can only be so high. So if you can avoid paying right now for a permanent rate buy down, I just genuinely would. I have a lot of people right now that are putting in offers, going under contract. We're looking at pricing, we're looking at numbers, and those are two really big conversations that I'm having, right? And obviously for those of you that are short on cash, that's a risk that if you're willing to take that risk and, you don't mind potentially not being able to refinance, that's fine. But I think that's really important for you to be aware of, because I don't think many people understand the potential hiccups and things that you can get caught doing. All right, with that being said, tomorrow we actually have 7 reports coming out. We have a monthly bond coupon rollover report coming out. We have consumer price index coming out, consumer price index excluding food and energy. We have a 10-year treasury auction going on. So tune in tomorrow. Those are some pretty decent updates. 10-year treasury also, FYI, y'all, has a big implication and typically has a direct correlation with mortgage rate. So I will be back tomorrow to run through the summary of what these reports are going to tell us and how this potentially could impact rates. As always, if you have any questions for me, please leave them in the comments. If you live on the East Coast and you are looking to buy in 2025 at any point and you want to strategize together, I would love to have a convo. Also, FYI, if you are looking to sell your home on the East Coast and you want someone like me to give you my honest opinion on best ways to market, strategize, and get your home sold, even with everything going on, please reach out. I would love to be and love to support you as a preferred lender on your listing. And I can also work alongside your real estate agent. All right, y'all, as always, love you so much. Hopefully you have a wonderful rest of your evening, and I will see you tomorrow.